Bank of India caught investor attention on Friday, May 30, 2025. Even though its Q4 results were released earlier, on May 9, the stock still moved up by 2.3% that day. Year to date, it's already gained nearly 19%. So the question is, does the stock still offer fundamental comfort for fresh buying? Let's dig into the numbers and trends to find out. Ever wondered which loans caused the most stress for Bank of India? Well, here's the good news: bad loans, also called slippages, actually dropped this year compared to last. But not all sectors performed equally. In FY24, small business and corporate loans were the big problem areas. Fast forward to FY25, and it's the agriculture sector that's making things tricky. Let's break it down and see what this means for the bank and its future. In 2023-24, Bank of India saw most of its bad loans come from two key areas. First, MSME loans. That's lending to small businesses, which often face cash flow issues. Second, corporate loans. A few large accounts slipped into default, adding to the pressure. Farming loans were also affected, but they weren't the biggest concern at the time. Overall, the bank was still dealing with old problem loans from earlier years. This year, the story flipped. The biggest trouble came from farming loans. Weather issues and repayment delays pushed agri slippages to the top. Small business loans, the MSMEs, still had some stress, but it was noticeably better than last year. And the best part? Corporate loans, which were a big problem earlier, saw almost no defaults this time. That's a clear win for Bank of India's cleanup strategy. So what does all this mean for Bank of India? It shows the bank has done a solid job cleaning up its big-ticket corporate loans. That's a major positive, but now, the pressure has shifted toward the agriculture segment. Rising farm loan defaults could be a concern if it continues. MSME loans? Still a mixed bag, improving, but not fully stable yet. Overall, the bank's loan book looks healthier, but it's not out of the woods just yet. Bank of India's loan book has clearly strengthened since the pandemic. After peaking in FY23, credit growth slowed briefly, but bounced back to nearly 14% in FY25, even beating the industry average. The bank has cleaned up most of its corporate loan mess. Now, farming loans pose the biggest risk, while MSME stress is easing thanks to better digital tools. Management plans to grow RAM, that's retail, agri, and MSME, by about 13 to 14% in FY26, using platforms like Star Vyapar and Star Mitra to drive smart dispersals.